So the big question is this: how do investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings in retirements and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Hey guys, this is John. Welcome to Side Park Studios podcast. Today's been a really big day. Some of you guys know about a month ago, maybe not a month ago, probably about a week and a half ago, bought crude oil puts when they were about $29 a barrel. I had some of my friends try to buy it too. It was actually kind of funny. This one guy, I'm like, dude, you gotta buy puts on crude oil. And he's like, let me transfer the money. And he transfers the money. It takes the fucking week to get. Anyway, some of you guys might know this looking back on this date. Some of you guys might not know this. Guys, today in the last 2 hours of trading, crude oil decreased by 290%. And when I say 290%, I mean literally 3 times the actual value of crude oil. And when I mean 3 times the actual value of crude oil, what I'm saying is that the contracts today expired at negative $30 a barrel for crude oil. Now, I bought April 20 puts on crude oil futures at 29 for about 3 or so bucks. And guys, these futures contracts, the net gain on per contract basis was $60,000. I mean, I just can't. I mean, it's crazy. I want to come back. I want to talk to you a little bit more about this position. Before I talk to you a little bit more about this position, I want to make a distinction, okay? About 2 weeks ago, my dad is talking to me. Probably 3 weeks ago, my dad's talking to me. He's like, you ever heard of this book called Options on Futures? And I'm like, what the hell is that? He's like, that's a thing? I'm like, are you serious? And so I instantly buy the book. It takes a couple days to get here. I read the entire book. And I learned absolutely shit nothing. I mean, if I could summarize the entire book in 3 sentences, the summary of the book was never buy options. Instead, sell credit spreads and sell options and just sell premiums. And the guys who wrote the book basically spent years and years and years. They would sell a 2-year premium. They sell a 1-year premium. And their goal was for it to expire worthless. Look, guys, I'm not going to bullshit you. Selling options is the dumbest thing you can do. I have a client. They have about 1,000 or so shares of Amazon stock, and it's a couple, right? So there's the wife and there's the husband. I work with the wife. They're divorced, been around for a while, but they manage the same investment account. 2 weeks ago, not 2 weeks ago, about a week and a half ago, this husband guy loves selling options. The guy sold 2,100 calls on Amazon for about $9 each. And I'm like, dude, that's the stupidest shit I've ever seen. I tell my client, look, you got to get that shit off there. You got to cancel it. I'm serious. Get it. That's insanely dumb. I was literally at the exact same time as him doing that, considering buying 2,100 calls. I'm like, I'm gonna take the other side of that trade. You need to get out of that position. They expired, I think, the 24th or the 20th. They expired I think it might have been today or the end of this week or something. The stock's at 2,450, 2,500, something like that. These options have gone up by literally. I mean, you turn $7 into $400. I mean, it's tens of thousands of percentage points. It's absolutely insane. And these guys had to close that shit fast because they lost tons of money. I'm like, look, you don't sell options. You buy options, right? And so, I'm sorry. My point with that was that you want to have massive upside, limited downside. You don't want to have unlimited downside and tiny upside. It just doesn't work. You can, I see people, they literally lose entire years worth of profits in a day because their option contract goes wrong because they fucking sell an option. And I'm like, dude, you can make hundreds of thousands of, thousands of percentage points when you just buy options. And anyway, I'm not going to spend the day teaching about options. I do want to kind of talk a little bit about crude because, I mean, it's just so crazy. So let me give you some background on this position. Basically, I read this book. I learned absolutely nothing from it. It has some good stories in it. But basically, what I learned from it was what the title of the book was, which was that there are options on futures, and usually it's hard to trade futures. Like for crude oil, you need to deposit $7,000 in an account. You need to be willing to like basically put down like $15,000 to $20,000 if you want to trade the futures contracts on crude oil. So it's a difficult thing to invest in. But then I realized, oh shit, you can trade options on futures. So basically, I just pull up forward/CL on Thinkorswim, and there's an option chain for it. And I'm like, shit, this is cool. I want to short crude oil. Let me buy April 20 puts. April 20 puts at 29. So I buy April 20 puts at 29. Because, like, oil's going to go down, bro. World's going to end. And also, without, being, joking, basically, the 3 days prior, all I've been doing is watch oil pump up the market. All I've been doing is see oil make new all-time highs. All I've been doing was see them go against every rule ever and just continue to go up forever and ever and ever, never coming down. And simultaneously, I saw about $700 million of dark pool prints in oil stocks at the exact same time. So I knew that it's experience, it's feel for the market, and it's a little bit of luck, but it's mostly just knowing what the hell you're doing. And so, I buy these puts for April 29. Or April 20, because that was the date. Right? And what I want to do is I want to sort of catch you guys up to kind of what I've learned today, because I've learned a lot today. And so I'm gonna kind of cut you guys into a conversation I just had with a TD Ameritrade trade desk dude. And the reason why is because it kind of explains, like, I'm just learning about this stuff right now. It kind of explains sort of how these options on futures work. So let me cut over to that real quick. I bought like 29 strike puts on crude a couple weeks ago, on /CL, and I was wondering like why the futures aren't like zero.
Well, it depends on which expiration you're
April
looking
20?
at. So you're looking at the April 20 futures.
Yeah, I own 29 puts on them.
Okay. So that is so the contracts are looking at the June future, right?
That's
So
what
those
CL
options
is?
for the June future. What's that?
That's what like CL is if you just type it into Thinkorswim.
You just type in CL and you're looking at that quote right now, 2102.
Yeah.
That is the June future.
That's the June futures.
That's the June futures. That's the one that your options are based on.
Right. Can you only trade options based off that, or how's that work?
I mean, you can trade the future itself as long as you got futures approval. But if you're trading options on the future, you've obviously got the futures approval. But as far as the April 20th expiration for the options, that's only going to be the June.
Okay.
If you get something later than that, you'd have to go out to, once you get to May, there's an option to go to the Julys in May.
Well, I mean, I'm closing
And
the position today. I mean, it's
Right. If you're looking at the April 20s, if you're looking at the ones that expired today, those are for the June contract.
Okay. So if you go to any futures contract, it's gonna by default show the options chain on the one that's like 4 months out.
It's going to, not 4 months out, that's June.
Oh, okay.
That's the active month. Keep in mind, May's expired today. So so that April 20th has that June expiration. It will show you, when you're looking at the options chain, it'll show you which contract. It'll show you the current one is CLM20. The next one is N20, which would be your Julys, and so on. So you can see that symbol. That includes the expiration date code on the end.
Can you trade options on those?
I guess I misunderstood. I thought you said you had an option on that June.
I have options on CL. I don't have options on like if I did like May or a different like month.
CL has an anytime you're buying CL, there is an expiration.
Right.
Okay. So the CL is the light sweet crude futures. So when you're looking at the options, let's do this. Do you have Thinkorswim in front of you right now?
Of course.
Okay. Well, let's get into your account. I can remote in, show you exactly what I'm talking about. It'll make more sense if I'm showing you where I'm at on the screen.
Okay, sweet, cool.
Can you tell me either the account number or the login ID for this account?
Yeah, I have some different ones. Let me just, I have one that's up right now. Can I just give you that one?
Right here. Do you see how these April 20s show CLM20?
Yes,
right?
CLM20.
Okay, that M20 is the June contract.
Gotcha.
It has to be a specific contract. You can't have an option without having a specific futures contract
Right.
specified, because there is no just the CL. You're always trading a contract that has an expiration date.
Mm-hmm.
Okay. Now, one thing I've also noticed here, looking at your account, you are not approved for futures. So you said you had a position.
Yeah, it's a different account. This is a Roth IRA.
This account, you wouldn't be able to put it in this one. That's for sure.
Okay.
But yeah, these will be expiring today, or these will expire today.
Yeah.
Based on this contract. In fact, I thought those already expired. Let me take a look at the options here. Double check something. Maybe close the trading day.
Thanks for the help.
Looks like the whole thing's calmed down. Oh, it has good. At least on this one. Let me double check something. Just want to make sure I'm giving you the right times for the expiration since it is today. Pretty sure it's the end of the futures trading day, but I want to make sure that's correct so you know when you got to get out of here, just in case you got to get out a little earlier.
Okay, thanks. I mean, it's no big deal holding till end of day. They're in the money, so.
Well, what'll happen if you hold it to the end of the day?
Yeah.
Let's say you just hold it. What'll happen when it expires is you'll get the contract, right?
Oh,
you'll
yeah.
find the contract at the strike, which if it's in the money isn't a bad thing, but know that that's what would be happening. I'm not seeing a response, but I'm pretty sure that would have gotten everybody's attention if I'd put it in wrong. If I'd have said the wrong thing. So that is going to expire at the end of the trading day.
Mm-hmm.
At the end of the futures trading day, I should say. And at that point, you can so if you're going to get out of it, you want to make sure you get out of it today, because it will expire at the end of the day, unless you're okay with getting the futures contract.
Right. All right.
You just hold it, because you'll get the futures contract at your strike, not at the current price.
Mm-hmm.
There's the one I was looking for. And the end of the trading day, the end of the trading day will be 4 o'clock. That's 4 Central, I should say. You're Eastern, so that'd be 5 your
Okay.
But it'll be trading up until then, and it will, whether it's in the money or out of the money, will be based on that June contract, the M20, not the K20.
Right. Gotcha. Damn.
And that K20 is doing some crazy stuff today.
Yeah. I mean, I was making bets that it was gonna go down a bunch by today, but I didn't make the right bets apparently. If you just buy the futures contract, is like if you just bought the K20, what's the margin for that? Isn't that like, is that a lot?
The margin for the K20 is the same as any other CL. So you're looking at that. Let me get that in front of me. CL is currently at 7,370.
Right.
Would be your margin requirement for the CL.
The initial?
That's the initial
Yeah.
for the CL contract. Yeah.
That's why I was doing the options.
Well, the options don't have that same margin requirement.
Right.
Okay, but if they get exercised and you get the future, then that margin requirement will be due.
Oh, okay. So I better close it.
Add it to the account.
Okay.
So that would come out of your buying power at that point. Which right now, well, you said you actually have the position in a different account, so
It doesn't have
you
$7
have to
grand
make
in
sure
it. So.
that- What's that?
It doesn't have $7 grand in it.
Then you want to close the options position.
Yeah.
Okay. If it's in the money, hopefully you can do that for a profit.
Right.
But does that answer the questions you called in?
Yeah, that makes sense. I appreciate it.
Okay, good. Glad I could help you out. I do thank you for choosing TD Ameritrade. Hope you have a wonderful day.
All right, thanks. You too. Have a great one. Bye.
You too. Bye-bye.
Do you know how to trade like a CFD on this? Like, can you do that?
A what?
A contract for difference?
No, I mean, you'd just be trading the regular futures contracts or the options. So if you're trying to do something else, we don't really do that. You're
Okay.
just looking. I mean, futures contracts are kind of that way anyway, in the sense that they're marked to market every day. But yeah, that doesn't sound like something we're doing right now.
Right. And there's no options on like the May ones. Just cause.
On the May one, no, because the May ones are expiring today.
Right.
Yeah, if you've got the future, if you got the option expiring the same day as the contract, how do you take delivery on the option?
Oh, right. Yeah.
Because there's nothing.
So
they can't expire
those
today.
expired 15 days ago?
15 days. What expired? No, the Mays expired today.
But what are the options on the Mays?
The options on the May, I don't see how far back those were. They would have been the latest they could have been was last week. You'd have to go back and take a look at those options, which aren't showing anymore because they're no longer trading.
Right,
They
yeah.
expired last week.
Okay.
Okay. Glad I could get you some answers here. I do thank you for choosing TD Ameritrade. Hope you have a wonderful day.
All right, you too. Thanks. Okay, cool. So the position like that I had was up like 1,000%, and it expired today because it was on the June contracts, which is like crazy. Because if you're looking at the news, like everything on the news is oil dips below zero, oil goes to negative $30, oil just crashed. It's the worst day in the entire world. And I'm looking at that, and the futures I'm trading my contracts on are at 20. I'm like, what the fuck? Why are they at 20? Why are they at negative 40? And I realized that you have to like actually be in the right futures contract. So I'm looking at all these numbers and I'm like, oh my god, I totally messed this up. And look, I'm not saying like moves like this are normal. Like 290% moves in a day on commodities doesn't really happen, like ever. But it did happen, okay? Like I was thinking they were gonna go to like 10. They hit 10 this morning, and then they just went to -7, and then they went to 0, and then -30, and -40, -50 at a point. I mean, it was just insane. But my contracts didn't reflect that because they were in the options, right? So anyway, I'm gonna do a whole lot of work figuring out because the futures, I guess, obviously, I mean, the return on that is, I mean, it's absolutely insane. The reason you couldn't trade options on the futures that expired in May, which are the ones that went up so much today, is very simply just because the contracts are what you're trading options on, and so when the option expires, you have to get filled with a contract, and they separate it by about a week and a half or so because they want to give time for the people that buy the options that hold till expiration to get in the money contracts to actually get fulfilled on the contracts to get the money in their account to get the contracts in their account. So you can't trade options on the really close to expiration futures, which is really bad because if you want to get the most volatility, you want to trade the closest to expiration futures, which is why about April 20 contracts. I was thinking the April 20 contracts were going to have the most volatility, but it was actually jack shit compared to the April 20 futures. Like the futures went up by literally hundreds of thousands of percentage points. I mean, I'm literally talking about a couple of $1,000 here turning into hundreds of thousands of dollars. You put in 10 grand, you're looking at millions, if not tens of millions. I mean, it's absolutely jack shit insane. I mean, it's just crazy. For me, it should have been about $420,000, $450,000. But it wasn't. The reason why is because I bought the options on a different expiration on the futures. And so, like, holy crap, if this episode doesn't teach you anything, it's that never close your eyes to a market. Like, for me, when I was starting out, I was never looking at the futures market because, like, you know, it's expensive. It's a lot of money to start in it. But there are plenty of investors I work with that I could have had enter this position for me and give me like half the profits. And, you know, 200 grand's not shabby, right? And so always look for a way to make something happen. I could have easily gotten into a direct futures position in this contract if I knew that the contracts that I bought didn't actually have the volatility that I thought they had. And so it is just massively uber critical that, I mean, this is a tough lesson to learn. This is a damn expensive lesson to learn because if someone just told me this, like, oh my God, man, I would have made hundreds of thousands of dollars today, but I didn't. And so I just don't want you to kind of make that same error, right? There's just so much opportunity. It's insane. Like it's just been so good, but and so I just hope you guys kind of take from this that, you know, there's always a way to do something. There's always a way to make that investment, and you know, obviously get into different markets and stuff. And if you know something's gonna happen, like I knew this was gonna happen. Well, I mean, I bought puts at literally at the top. You know, it never went above 29 for, you know, the time frame it was in. And it just went straight down for 2 weeks, and then today, it went from 29 to negative 40, negative 50, negative 47, I think. And I mean, that's really, I mean, if I just, it's like you just want to know kind of what you're doing. So yeah, I guess I have a lot of my students that I, you know, told about this trade, and like I said with Matthew, he was trying to get in the trade, and then he couldn't, and then the cash didn't clear. And he was trying to buy the options anyway, so it's not like it would have mattered. They only went up 1,000% versus the contracts, which, I mean, it's hundreds of thousands of dollars, you know, millions of dollars. I mean, it's very difficult for me to quantify and to express. Like there are people today that made billions of dollars on these contracts, and I mean life savings were created today, and it's just on one financial instrument. And you know, I'm writing this paper on decentralized order books. I just finished a really big chunk of it, and you know, one of the things with it is it's tough to actually access these more complex derivative financial instruments just because of the way that access to them is kind of systematically revoked from retail investors. And so it's also kind of something that I hope to solve with kind of decentralized asset management. So, because like when you have a position like this, a lot of times, you know, the best performing positions you ever have are going to be the ones that you didn't really expect to explode. And that's why, you know, most likely, I just didn't think that maybe I should ask one of my investors to, you know, get in on this contract on my behalf. And And that's why it's really important that the investments, the potential investments that you have, are at your fingertips and always completely liquid. And for me, I entered this position on a Saturday, like in the middle of the day, which was really, 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 really difficult to do. And so if you don't have liquidity, or if you don't have the actual ability to touch the asset in an easy, simple way, like it shouldn't take me more than 15 seconds to make a trade once I know I want to make it. Because if it does, what it does is it takes that investment and it literally pushes it away from 90% of people. Because most people are like, I'm lazy. Like, I'm not going to like open up an account at a CFD broker or some shit like that, which is totally sketchy, super bad idea. Don't do it. I'm just saying, in this one example, with this one trade, it would have resulted in millions and millions. I mean, at least, hundreds, 400, 500, 600,000. I mean, what I'm saying is that centralized markets, the way they restrict sort of the assets you can invest in, it's kind of messed up. And so that's why, a lot of the work I do is in decentralized asset management. All my long-term goals are in decentralized asset management, because I know when you have these assets at your fingertips, today was literally a day that anybody with the right information, who knew what they were doing, could have made what most people make in, a year. And there's some protests right now, people wanting all these states to reopen, and arguing that they should go back to work. I see this position because of $60,000 a contract, and I say, you know what, dude, if these guys just knew, like, it's right there. So that's kind of my story today. It's been a absolutely amazing month. I'm sorry, the podcasts are obviously, I'm just on like constant highs off of like the dopamine, and it's just been so amazing. So I do want to thank you guys very much for listening, and go out there, apply it, absolutely crush it. I'm excited. This is giving me a lot of motivation to teach some seminars in the implementation program on futures, on contracts, on options on futures. And I'm glad to be kind of getting some experience in it, because obviously when you know what you're doing with volatile markets, this is some seriously cool stuff. I remember this. I'm going to kind of leave you guys with this, just because I think it was probably the biggest takeaway I had today. I was like sitting there staring at windows like, holy crap, there was so much money. And what it is that a vast majority of your profits are going to come from a minority of your investments. And it doesn't mean you shouldn't make a bunch of investments. Like, obviously, you got to try things to make things work. But I mean, this position is enough, to make, like, I mean, you could literally retire off this position. So focus, please, a lot of people focus on like, oh, I'm going to make these little percent returns and compound it over time. And that's great, okay? But please focus on like groundbreaking, game-changing, next-level quantum leap positions. There was recently, really recently,
Want more stock market secrets? If so, go get your free copy of my best-selling book, 9 to Noon. You can get your free copy plus $11,176 of unannounced bonuses it took me years to uncover, completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% per trade daily.